Good morning, folks. Let's talk about gold. One of my favorite topics. I have a theory about the current behavior in gold, in basically all currencies on planet Earth. And as you can see in big bold letters, there is my theory. Quantitative easing started globally in March, April of 2019. We're going to look at some charts. I think it'll be obvious from the charts what it is I am suggesting. What do we got here? So this is Japan. So this is gold in the Japanese yen. We're looking at a weekly time frame. And so if we look at this horizontal support, it's just showing that, back here in the end of the 2001 to 2012 rally, gold double topped here in the Japanese yen, has not been able to better those values since, until we come down here. What is that? That's August of 19. So August of 19, gold in the Japanese yen fires off to new all-time highs, correction, new all-time highs. Let's zoom in a little bit here, just to look. So this spike, this is early January. This is the spike gold. The price of gold spiked internationally that first week in January when it looked like the U.S. and Iran were about to start World War III. And so that spike kind of died off. But what's interesting, and of course we're going to see this in all of the charts, gold backed off from that new all-time high, but it didn't back off much. And so that's what we see. Not only did it not back off much, if you're familiar with candlesticks, these are called dojis, and when a doji has a long lower tail, that's a bullish sign, because what it means is that the sellers pushed price all the way down to the bottom of the tail, and then buyers came back in and they pushed price right back up. And so that's what you end up with, is this string of dojis. And those are not gravestone dojis. So anybody that wants to call those gravestone dojis, I would submit that that's not a correct interpretation. But you know what opinions are worth. Okay, so there's the Japanese yen. Oh, and then back to my premise. So what happened here in May of 2019 that caused gold to go essentially vertical? My premise is that that's when quantitative easing started on a global basis. And of course, we're talking about Japan here. They've been doing quantitative easing, negative interest rates for, I think we're on the third decade. And of course, we can see how well those monetary policies have worked out for Japan. In case you don't know, they haven't worked, but that's a different story. Okay, let's move on. This is the British pound. And so again, same kind of thing. All-time highs at the end of the last big bull market. Come over here, April, May 2019, gold goes vertical, shoots through that previous resistance level, new all-time highs. Got a little bit more of a correction in the British pound, but then we're right back. Here's the run up into what could have been World War III and a price spike, and again gold backed off from that fear-based high, but didn't back off much, and now it's right back right back challenging resistance. And again, if we look at these long lower tails, all of that action is bullish. Again, we're on a weekly chart, so this isn't just volatility, price flopping around on a 3-minute chart, for example. This is a weekly chart. that's gold wanting to go higher. Gold, I submit that gold in the British pound wants to go higher. And let's just zoom in. Look at that candle. I mean, that is a bullish candle. It's got a long lower tail, solid body. It's testing resistance at the median line of this fork. We got MACD in bull mode, which means that both the indicator and the moving average are above the zero line. So there's the zero line. See that both lines are above the zero line. So bull mode, and then of course we got a buy signal back here. So in the British pound, gold is in bull mode on a buy signal, pushing against resistance. I suspect it'll break out to new all-time. Well, these won't be all-time highs, but it'll be. It's going to push past that early January high. Continuing on, so now this really caught my attention when I looked at it a few days ago. So gold in the Chinese yuan, and so you'd think with everything that's happening in China, gold would be weak in the Chinese currency, and of course that's not what we see here at all. Again, weekly chart. April, May, something happened, gold goes vertical. Gold goes vertical, we get a pullback, now it's pushing back to all-time highs. We can see first week of January, so that's a new all-time high in Chinese yuan. Got a pullback, not a big one, but now we're pushing back, trying to go higher. This activity this week. So now gold is currently today testing this support level, what I assume is a support level. And again, if we look at these two candles, we've got long lower tails, bullish. This candle is still being painted because we're on a weekly chart. And just in contrast, so if we looked at a doji candlestick, long lower tail there, that's a bullish indicator. This candle is not so bullish. So if we look, this is also a doji, but see here we've got a long upper tail, which is bearish, and a short lower tail. So that is not a bullish indicator. But again, price of gold went on, it's pushing back higher even after that bearish indication. So let's continue. So gold in the US dollar, let's zoom out for the big picture. So again, this is back, this is the end of the 2001 to, in the US dollar, it was 2011 when price peaked. Haven't bettered that all-time high yet. Big picture. So again, here we are in the April-May timeframe of 2019. Something happens, gold goes vertical, pullback, pushing towards new highs for the move. If we zoom in, we see there's the early January price spike, price pushing back towards that 1600 round number, which of course is significant. And then we get a pullback, a little bit soft today, this week. That's this candle, because again, we're looking at weekly charts today. If we look at the big picture here, let's spend a few minutes with US gold, since I assume that most of us are. Most of us probably looking at gold in the US dollar. That seems to be typical. And we could talk about how the current price control mechanism for gold is in US dollars. And we could also talk about how all of the previous attempts at managing the price of gold have failed. London Gold Pool, Bretton Woods ended in 1971. Thank you, President Nixon, for closing the gold window. Bretton Woods transitioned into the petrodollar, so the U.S. dollar became backed by Saudi Arabian oil. But that's really a whole different story that we don't want to get into right now. But so anyway, point I would like to make on this chart is that the 1600 level in US dollars is significant. Significant on a psychological basis, significant as a round stone. It is also significant because, in my opinion, this is the last significant resistance before gold runs off towards new all-time highs. Yeah, you're going to bump into some, we're going to get another round number at 1800, and we'll have some fighting to do there. But anyway, point is, gold is doing just fine, and we'd actually be better off if gold spends some time gathering energy underneath the 1600 level. If you look at this price rise, it is way too steep to be sustainable. That is not a sustainable price movement. Gold really needs to do some consolidation, gather some energy before it pushes on higher. That's in a healthy market. Gold is, in my opinion, well managed. A lot of entities trying to control the price of gold, and again, topic for another day. So there's gold in the US dollar. Let's just throw in, for funsies, let's throw in MACD. What's MACD got to say? So MACD, again, we're in bull mode. We got both the indicator and the moving average well above zero. Currently on a buy signal. The histogram is telling us that momentum has slowed down. Not surprising, that's just fine. We've got this horizontal support zone. We got support from the median line of this. That's a modified Schiff pitchfork. So multiple layers of support. Let's throw where we at with the moving averages. So on a weekly chart, we're going to show this 10-week moving average and the 40-week moving average. And so we can see gold in its latest upward movement is staying above the 10-week moving average, comparable to the 50-day moving average if we're looking at daily. So let's see, let's move on. And so now, this is my theory, going back to my theory, that's where we started. Quantitative easing started globally in March, April of 2019. What happened in March or April of 2019? I mean, I've got a premise. Obviously, I need to provide some evidence, some support for why I believe that we're back into quantitative easing mode. And so, well, looky here. This is the United Nations Department of Economic and Social Affairs. And so this is a briefing that they published in May of 2019. Isn't that interesting? World economic situation and prospects. Okay, so global issues. Aligning monetary policy with SDGs. Oh, and SDGs is defined down. Sustainable Development Goals. Now I'm remembering. So SDGs are Sustainable Development Goals, which, that's double speak. Doesn't mean anything. It's just bullshit. But so anyway, here's the UN telling us that there has been a slowdown in global economic activity, largely benign inflationary pressures triggered a shift towards easier monetary policy stances across many developed and developing economies. Yes. In March, United States Federal Reserve lowered its expectations to interest rate hikes to none, announced that it will begin to slow the pace of its balance sheet normalization. And so let's remember that back in this time frame, the Federal Reserve was on autopilot, extracting money out of the markets. And if I remember correctly, that automatic tightening was incremental. So every month it was automatically increasing the amount that was being pulled out. And in March, we had yet to reach the maximum of that autopilot, which I believe was 50 billion a month. And so we never reached the peak of the automatic extraction before the Fed reversed course, massive 180 in March, went from autopilot tightening back into easing. Not only easing, if you go read some of the other stuff in this time frame, basically announced quantitative easing, although of course they didn't call it that, since that's a politically incorrect thing to say. But so anyway, March of 29, U.S. Fed did a massive 180. It served as a shock to the economic community. But it was not just the U.S. So European Central Bank, they eased. People's Bank of China eased. Isn't that interesting? And then we also had Egypt, India, Nigeria. There were other countries. So Africa, Latin America. And so anyway, this is the UN. This is not some fly-by-night organization. I mean, if you choose not to believe the UN, that's your choice, certainly. But this is the UN publishing economic data for the world. They're telling us that something changed in March, and of course that's what we're seeing in all the charts. So that's gold. And shoot, we're at 17 minutes. This video has gone way too long. And so just as a quick, we'll have to do a follow-up on these charts. Just as a quick look at what's happening economically in the world, this is copper. And of course, if you read economic news, you'll hear some people calling this Dr. Copper. And the reason they call it Dr. Copper is because copper tends to be an excellent indicator as to the state of the global economy. And what we see here is that this is the first week in January right in here, and something happened that caused Dr. Copper to go in the tanker. Let's get volume out of there. It's messing up our picture. So first week of January, copper went into the tanker. We're getting a bounce in the last 2 weeks, and of course it's bouncing off of a very strong support level. So had it not bounced there, would have been even bigger cause for concern. But as far as the state of this market, you can see MACD, we're on a sell signal. We're still in bull mode, but just barely. Yeah, so there's copper. Let's look at one more chart. This is oil, and in particular, I prefer to look at Brent oil futures as opposed to light crude, because the drop-off in demand for energy that started in early January is much more visible on the Brent oil chart than it is in the light crude. And so you can see that early January demand just fell off a cliff in oil. And so it did not bounce at what we would have expected to be a support level. It's just continuing to drop. And then if we zoom out, look at the volume here. Let me move price out of the way so we can focus on volume. So look at the selling volume for the last, what is that, 6 weeks? Somebody is selling the heck out of Brent oil. Not sure what's going on there, but that'll be a topic for another video. I'm past 20 minutes. Sorry for dragging this on so long, folks. I will talk to you soon in another video. All right. Subscribe to our channel. You'll get the latest technical analysis of all the markets, primarily precious metals. And of course, there is the subscribe button. Stay tuned for part 2 of this video series, and let's take just a quick spin. These are just a few of the charts we'll be looking at. Probably stay on strictly weekly charts again. Gold in US dollars, right there working on 1600. Gold in euros, we got a new all-time high just last week in the gold in euros. Gold in the Canadian dollars, new all-time high after the early January spike. We'll take a look at that. And then gold in the Australian dollars, and again, new all-time high after the January spike. So gold is looking strong, doing just fine. And so we'll definitely be looking at gold in a few more currencies. And we will continue to expand on our premise that quantitative easing on a global basis started back in March 29 and just getting stronger. What's on your mind? So if you've got an economic topic that you'd like me to cover, and preferably something we can illustrate with some charts, just let me know down in the comment section. Visit the website. We provide education for investors in precious metals. Our approach is mostly on a portfolio mix of physical metal and then the mining stocks. And of course, depending on your risk preferences, your portfolio will be structured differently than somebody else. So yeah, whether you want to talk about gold, silver, mining stocks, it's all there. If you're looking for because there's a lot of content on the website, this is a suggested way of tackling that content. Start out on the precious metals, well, it's a tongue twister, precious metals page. And then gold as an investment, silver as an investment, and then the mining stocks. You can find us out on the web, obviously website, YouTube channel, Facebook, Twitter, LinkedIn. We're everywhere. Thanks, guys. Have a fantastic day. See you soon.